Welcome back. So we're going to discuss a lot of the numbers, and of course Reliance was the big earnings that came out on Friday post-market. As Jal Irani, the Executive Director of Nuvama Institutional Equities, is with us to talk about that. Jal, thanks for being with us. We've had, over 48 hours to sort of digest these earnings. But tell us about the way forward. As a Reliance investor, what are the 2 or 3 things that you need to look forward to now? Of course, there's the AGM coming up, there's GFS, there's the new energy business. But what tops your list?
Well, the way I look at it is that, essentially Reliance has got very, very broadly 3 businesses. The oil to chemicals and gas business is by far the largest and will remain the largest. It's even in this quarter, it was 67% of the consolidated net profit. So that's by far your biggest business. And your other 2 businesses also, which is the Geo Digital business, which is 20% of the net profit, as well as retail business, which is 13% of the net profit, are now, all of them are actually fairly matured businesses. Of course, O2C is by far the most matured. So in digital and retail also, what you're beginning to see is a fairly healthy and relatively steady growth, so to speak. So I'm not too sure how these large businesses are going to make a very big swing factor to the company. They will grow at a fairly healthy pace. But I think going forward, the biggest difference is going to be the new energy business. In the new energy business, Reliance didn't even, if I'm not mistaken, didn't even have one line on the results this time around. But that is a business, actually, they are very structurally and very sensibly moving forward with. We are hoping in the forthcoming AGM, which we presume is going to be sometime in August, that they talk about that a bit more, which will give actually a deeper insight into, the blueprint which we've tried to forensically gauge. They are moving forward with that actually in a very sensible way, and that could be the next multi-tens of billions of dollars value creation, if not $100 billion value creation business.
All right, so that's about the new energy business, and that's something that you'll be watching out for. But Jal, your view on the oil to chemical and oil and gas business itself, the volumes that the company reported in the first quarter is actually the volumes that they had targeted 2 quarters later. So they've actually gone ahead and managed those volumes in the first quarter itself. Your thoughts on what could be the risks in this business going forward, even as we eye optimism in all other businesses? What are the risks that you'd like to put on the table for this vertical?
So see, if we, let's talk about oil, chemicals and gas, okay? Now, the refining business is going to see further fine-tuning, but not a huge volume growth going forward. That is a business which is going to have 2 things happening for it in the longer term. One is that, in fact, even in the medium term, in the near to medium term, for the refining business, as you know, we believe we're going to be entering a phase of golden era of refining, which essentially means by next year, if we are not already there, existing refiners are going to enjoy supernormal margins for a very long period of time, as new capacities globally are not coming up in hordes. So that is a relatively steady but a humongous cash flow business. The second thing which is going to be happening in refining is costs are going to be reduced. And there, the new energy business is extremely synergistic with refining. Essentially, green hydrogen, which is a part of the new energy business, is one of the large inputs in refining. And as green hydrogen gets churned out over the years, your costs are going to reduce, plus you'll get a valuation re-rating because a dirty business becomes green. Okay, so that's your refining business. The chemicals business is one which is growing in volumes and which has got volume growth potential globally as well. And that's linked to the refinery business. But that's a very cyclical business. That did see actually very poor margins historically, and we've seen some margins come back. That is going to see a volume plus margin increase.
Sure.
And then finally within this domain is the gas business. Yeah.
Yes, complete your point. We just wanted to add in, since we're running out of time, if you could just give us a sense in terms of what your expectations are from the AGM, or what investors should be expecting from the AGM, and any kind of revision in terms of the target price as well as earnings post this quarter's numbers from your end.
So, see, they'll certainly be talking more about the chemicals business where they're expanding aggressively. They'll certainly be talking about what they're further doing in the retail and geo business, where the big bang announcements, I think, will be limited. But what you should expect in the AGM is significantly greater clarity on the new energy business. I think that is, like I said, potentially a multi-tens of billions of dollar value addition that they're capable of doing. And they're actually reasonably advanced. In fact, they should start production, in my opinion, in the modules by March, April of 2024. And that's where actually you're likely to see further clarity. In terms of the target price, actually, we've not changed the target price. We simply stripped out the value of Geo Financial Services, and we maintained a target price otherwise at 3,088 rupees a share.
Okay, 3088 you said, right?
3088. Correct.
All right. Okay, Jal, we'll leave it at that. Thanks a lot for stopping by and speaking to CNBC TV18. Appreciate your time here. Let's slip into a quick break. The big stock that's moving in the broader markets is Aarti Drugs. Adish Patil, the CFO at Aarti Drugs, will join in to discuss their quarterly numbers, what went right this time. Stay tuned for more on that.